The world's single biggest investor is distancing itself from Israel. Could this be the beginning of a wider global sell-off over Gaza? Norway's $2 trillion sovereign wealth fund has sold its shares in 11 Israeli companies. The decision follows growing public outrage over the humanitarian crisis in Gaza and the fund's financial ties to businesses allegedly linked to the war there. It seems Israel's global brand is becoming increasingly toxic. The Norwegian sovereign wealth fund is the biggest in the world. It held shares worth $1.95 billion in 65 Israeli companies at the end of 2024, just a fraction of its global portfolio of 8,700 firms. So now, with these 11 Israeli companies gone,
it is roughly $1.5 billion. So this sounds a lot, but relatively speaking, to the investments in Israel, this is, of course, a tiny amount. The symbolic meaning of this act is much more important than a quantitative one.
The decision could put pressure on other investors to follow suit.
Because once this dam is broken, we don't know how many other funds will follow. If this becomes a flood, this will be of very significant importance.
But for now, Israel's economy isn't even close to feeling the heat. The Tel Aviv Stock Exchange hit record highs this year despite nearly 2 years of war in Gaza. Some analysts say any real influence would have to come from Israel's trading partners.
A third of its entire import comes from the EU, and a quarter of production inputs. So some sanctions, official or unofficial, placed on exports to Israel, that may have serious effects on the ability of Israeli firms to function.